Welcome to the year 2023, where Silicon Valley is currently in chaos. Almost all of the major big tech companies are collapsing. Facebook was worth over $1 trillion in 2021, but just a year later, and that value has dropped by 2/3. And the other giants like Amazon, Twitter, Tesla, and Netflix have overseen massive revenue drops. The scale of these losses is unprecedented, especially considering big tech has been so unstoppable for the last decade. In fact, revenues and profits were skyrocketing not too long ago. Silicon Valley was a billionaire factory, with some of the most prolific billionaires building their net worth on the back of big tech companies. Gates, Musk, Bezos, Zuckerberg, and Dorsey, all of which were created by the massive growth of the last few decades. Recently, their bubble has been popped, and now the biggest names to Silicon Valley are seeing their revenue plummet, firing hundreds of thousands of employees with the stock value of almost every big tech company falling dramatically. Which leads us to the question, how did it get this bad so quickly? You see, tech was a growing part of the world's economy for years. Over the last decade especially, tech companies have only got larger and larger. Now, of course, there have been ups and downs. For example, the dot-com crash in the late 90s previewed the catastrophic consequences of overvaluing tech companies. However, over time the industry always picked up again. It was a measured climate at first, but soon people forgot the mistakes of the past. As the years rolled by and technology improved, the companies behind it grew richer and richer. But there were massive problems on the horizon for Silicon Valley, because the path wasn't all golden. Companies like Instagram have coasted on their potential, with growth focus instead. But that is not a proper model for profitability. The same could be said for Twitter, and yet, despite this, all of the giants of the industry grew to immense proportions on paper. In 2018, Facebook surpassed $500 billion in net worth and Amazon closed in on $1 trillion. All of these companies had a similar problem. They just weren't worth what people thought they were. Their business models were in constant need of investments, or they just didn't make that much money. Their margins were always incredibly tight. That is why almost all of these tech billionaires never look at the stock price. Technology has infiltrated every aspect of our life. Companies have always looked to capitalize on future opportunities, and their questionable operations have been somewhat overlooked by the majority of citizens. These large technology firms were acquiring more power and seemed invincible, owning the valuable commodity of data and viewership of the entire globe. As social media firms began collecting user data on a large scale, their focus shifted to maximizing user engagement, making it a priority to keep users on their platforms for extended periods and encouraging frequent use. This is why people have become addicted to their devices. It allows tech companies to earn billions through selling ads and leveraging users' personal information. As time passed, these businesses perfected their tactics by manipulating people's psychology, making apps so appealing that the world could not function without them. They discovered that posts that provoke strong emotions such as anger and fear are highly effective in keeping users engaged. As a result, the algorithms of these apps were adjusted to favor more extreme and controversial content, which resulted in them being placed prominently on users' feeds. While these companies were censoring information that didn't align with their political beliefs, it became a breeding ground for addiction, censorship, and hate on social media platforms. Over time, this led to an escalation of tension online and offline, resulting in riots, unrest, and society breakdown. The tech companies did not seem to care about the negative impact of their algorithms, and instead of addressing the issues they created, they began to heavily censor opposing views under the pretense of combating misinformation. However, this approach would not be sustainable in the long term, as the tech companies would ultimately be held accountable for their actions. In the meantime, they faced another challenge in the form of competition. Over the past decade, China has rapidly grown in the technology sector, with companies such as Tencent, Huawei, and ByteDance taking market share from Western companies on a global scale. Tencent, for example, has acquired numerous Western companies like Riot, Epic Games, and Ubisoft, and is undermining Western dominance in the profitable gaming industry. China is now home to popular games and apps like Fortnite, League of Legends, and TikTok. Tencent has also invested in platforms such as Reddit and Discord. Among these companies, ByteDance is considered to be the most disruptive, and it has had a head start in understanding the potential of social media, which it used to develop platforms like TikTok. This has had explosive growth by mimicking the business strategies of Silicon Valley companies and learning from them. Now, almost every major app is utilizing the short video format popularized by TikTok, posing a direct threat to Silicon Valley companies. Chinese technology companies have a strong advantage over their Western counterparts due to their close relationships with the government. This gives them more freedom to grow and expand without facing the same regulations and ethical considerations as Western tech companies. Furthermore, these companies have government support within China and internationally, making them a formidable force in the industry. As Chinese technology companies continue to grow and scale, they are slowly overtaking Western companies, with Silicon Valley being heavily affected by this trend. While these issues were not yet apparent, they were looming on the horizon. In 2016, TikTok was just starting to gain popularity, and it was expected that they would see significant growth. At the end of that year, some journalists were praising Silicon Valley as the future of the industry. This was due to the shift in the top companies, which were previously dominated by oil and manufacturing and a few large financial giants. But now, companies like Google, Amazon, Tesla, Apple, and Microsoft have taken their place. However, despite their high valuations, these companies have not generated as much profit as they should have been. Despite being valued at $1 trillion, Amazon has only generated $2 billion in profit up to the year 2015. This strategy, though aimed at avoiding taxes, highlighted the disconnect between Silicon Valley companies and the rest of the world. Instead of prioritizing profitability, Silicon Valley has been more focused on growth, which is evident in the case of many technology companies. They can spend years focused solely on expansion, disregarding laws and ethical considerations, using chaos and violence at times to establish a foothold in the market. Despite this, they have had significant financial problems and have faced market saturation with declining stock prices in the entire tech industry recently. Many Silicon Valley companies have gone bankrupt due to overconfidence and struggle with profitability, losing significant market share as quick as they may earn it. For example, in early 2019, WeWork was considered an innovative and promising new company that aimed to revolutionize the way people work. The company's CEO, Adam Neumann, had fully embraced the Silicon Valley mentality of focusing on growth above all else. Neumann was highly successful in convincing investors to fund the company, and within a few years, WeWork had raised over $1 billion for their office space business. However, despite this influx of funding, the company has been plagued by mass layoffs and poor financial performance as investors had invested in the idea rather than the actual product or service. This exposed the unsustainable business model of Silicon Valley companies, which rely on massive debts and low revenue propped up by other people's money. Consequently, the company's valuation was cut by 3/4 in a matter of days, leading to the firing of 20% of the company's employees, the resignation of the CEO, and the scaling back of the company's ambitious growth plans. The collapse of WeWork was a harsh wake-up call for the industry, but unfortunately, Silicon Valley has yet to learn from the failure of this company and other similar cases. The same business practices that led to WeWork's downfall are still being used by other tech companies. The technology industry has come under scrutiny for its negative impacts on misinformation, political polarization, privacy, data security, and mental well-being. Despite these issues, Silicon Valley is still seen as an innovative force. Governments, investors, and consumers are starting to call for more regulation and oversight of the technology industry. It's in the best interest of these companies to proactively address these issues rather than waiting for government intervention. To achieve this, Silicon Valley needs to focus on creating sustainable business models, increasing transparency, and taking actions to mitigate negative consequences of its products and services, such as investing in ethical AI, protecting user data, and promoting digital literacy and well-being. The technology industry has greatly impacted our lives and work. It's crucial for Silicon Valley to take responsibility for its actions and work towards a more responsible and sustainable future. Failure to do so could have major consequences for the industry, society, and the people that it serves. Thanks for watching. I will see you on the next one.